But first, in the spirit of this being the end of the first half of the year, what happened in the crypto market for year to date so far? Well, as you can see by this deep red here, that's really not been good. Bitcoin down by 60%, Ethereum down by 72%, Binance's coin is down by 60%, ADA is down by almost 50%, XRP is down by 60%. The light red you see here for USDC, well, that's a stable coin, so that doesn't even really count either. The green here that you see from DAI, again, another stable coin. For the most part, the crypto market has been getting absolutely hammered, as we all know. Now, the narrative that's being pushed by the legacy media here is that this is the worst 6-month period, the worst consecutive quarterly period for 10 years for the crypto market. There isn't an awful lot of history to look back on for the crypto market, but considering how aggressive some of the falls have been in 2018 in the past and things like that, this is actually quite major news. But so what are the new developments that are driving the market today? Well, the first one is that Three Arrows Capital is still causing a lot of turmoil. We've just got news coming out of Singapore that companies blockchain.com and Durbit are working with the Singaporean authorities to try and investigate Three Arrows Capital to find out if there was any fraud at play, if there's anyone at fault, or if this was just a case of an investment firm going wrong. Now, of course, the 3AC collapse is absolutely awful for sentiment. That firm itself has lost somewhere in the region of $10 billion over the last few months. And then they, of course, took out billions of dollars in loans from other crypto firms like BlockFi, which we'll also talk about in a moment. And so those companies are all in $100 million holes as well. Now, speaking of BlockFi, what's the news regarding them? Well, firstly, they are a huge cryptocurrency company. They mostly work in lending, but they also offer a crypto credit card, a bunch of things like that. Now, this is mostly rumors, what we're hearing here, and BlockFi is, as of yet, still functioning. Though if you do have assets with BlockFi, I would suggest that maybe it might be time to take them out and put them on some cold storage. That's what I've done over the last week or so. A lot of people seem to think that BlockFi is on the brink of bankruptcy, and this isn't coming from, YouTubers like me. This is coming from CNBC and Bloomberg themselves. Now, the idea here is that they supposedly gambled a lot of their investors' money on long crypto. They took out long leveraged bets, and then they also lent out a lot of money to other firms like 3AC, and of course, they're not getting that money back, so they're in a massive hole. Now, FTX, which is a newer crypto exchange, one that has really blown up recently and actually focuses on institutional support, i.e. giving out $100 million loans to companies like BlockFi, that kind of operating, well, they seem to be very solvent and very healthy, and they have a strong balance sheet. And they are sort of going on a buying spree, moving around and consolidating their market position. The rumor right now is that they're going to buy BlockFi for $25 million. Now, that's a pretty major hit to its previous round of private funding, which saw it valued at $5 billion. So this is a major change. Now, in fairness, I said this was rumors, and it does seem to be rumors so far. This tweet here is from BlockFi's CEO, who basically came out and said, no, this isn't true. We're not selling BlockFi for 25 million. You should only listen to what we have to say. But then these legacy media firms like Bloomberg obviously have their sources likely within the company itself, and they seem to be saying the opposite. To be perfectly honest, I wouldn't be at all surprised if this is the case. There have then been a bunch of other rumors surrounding Celsius, which basically collapsed a couple of weeks ago now. And again, FTX was looking at buying up Celsius, at restoring its balance sheet and, paying out its investors and incorporating it into its business model. But the rumor that's going out now is that Celsius was so bad, as you can see from this tweet here from Watcher Guru, that FTX passed on buying them because they have a $2 billion black hole that they just can't fill. And so as a result of that, the company is literally worth nothing. It's worth negative value. The funny line that's going around surrounding this is that previously in 2008, we had too big to fail firms, whereas this year in 2022, it seems like we have firms that are too crap to save. Now, finally, for crypto for the day, we had some pretty major news coming out of the European Union, and they've agreed on this massive new crypto regulation bill that has a load of different aspects and things like that. It's called the Markets in Crypto Assets, and the basic idea is that the EU wants to get rid of the Wild West. That's the idea that they're pushing here. There are a bunch of things here. Some of them are very good. For example, they want to regulate the stablecoin market, which is absolutely brilliant, and I love this idea. You can see here under the new rules, stablecoins like Tether and Circle's USDC will be required to maintain ample reserves to meet redemption requests in the event of mass withdrawals. They also face being limited to 200 million euros in transactions per day if they become too big. Now, I don't know about you, but that sounds like a brilliant idea to me, especially after UST, Terra and Luna and that whole collapse, which led to hundreds of billions of dollars of value being lost. There are, though, some concerns I have with this bill, some things I don't agree with. As you can see from this highlighted part here, it will also address environmental concerns surrounding crypto, with firms required to disclose their energy consumption, as well as the impact of digital assets on the environment. Now, to be perfectly honest, I don't like this at all. Frankly, I'm not too bothered about this kind of idea of cryptocurrency damaging the environment, and I don't think it's fair to single out cryptocurrency for this wasteful energy usage when there are plenty of other industries that do the exact same thing. I see no reason why cryptocurrency should be unfairly singled out for this thing. Finally, then, we have a bunch of news regarding know your customer legislation, and basically it's going to make it really hard to hide your identities. As you can see here, any transfers over €1,000, you need to have basically names tied to each wallet. You're going to need addresses tied to your wallets to work with certain institutions, with exchanges and things like that. I'm not particularly happy about this either, but I'm not at all surprised. This is fully expected, and it's been a long time coming now. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.